Green India, driven by renewable energy and innovation. This isn't just a budget. It's a vision, a promise, and a...
Good morning. You're watching The Market right here on ET Now. And over the weekend, India celebrated the 76th Republic Day at the Kartavya Park in New Delhi, which marks the adoption of India's constitution in 1950. Indonesian President, that's Prabowo Subianto, was invited as the chief guest with a 352-member Indonesian contingent participating in the parade. In addition to the VVIP dignitaries, nearly 10,000 special guests were invited to witness the 76th Republic Day parade. This year's parade themed Viksit Bharat Ki Aur Sadaiv Agrasar. The parade featured contingents from the Indian Armed Forces and paramilitary forces as well, with a total of 18 marching units, 15 bands and 13 tableaux on display. A key highlight of the event was the first ever tri-services tableau demonstrating battlefield operations across land, air and sea, featuring indigenous defense assets like the Arjun battle tank, Tejas fighter jet and of course the advanced light helicopter as well. I'm wondering though whether that display of military prowess is going to inculcate or translate into more investments as well into the sector or not.
You know, it's always a feeling, you always feel nice when you see the kind of, display of the technology, B, lot of, display this time in the Republican Day parade essentially was centered around Made in India. Yeah. You always earlier, as a child, when I would watch that, what would you say, Republic Day ki parade. Jhankiyan. Yeah. It was really about display of what you, in a sense, had accumulated from, foreign manufacturers. Yeah. This time the pride is that, India is protected by Made in India. Whether it is weapons, whether it is tanks, or whether it is now aeroplanes. So that's the Republican Day. India celebrated its 76th Republican Day. But this week is not an ordinary week for the market. This week is very different. This week is about news. It's not about views. We start the week with one simple assumption that will there be a pre-budget rally? Because budget is there on Saturday. Second, this week is loaded with central bank policy action. If that was not enough, you got major Nifty 50 companies starting from Bajaj Auto to L&T, which would be declaring their numbers. And for the traders, there is an F&O expiry. So this is a jam-packed week. Lot of cues would be thrown at us. Let's see how Indian markets are able to defend or fend themselves. Because by the time we will come out of the week, which is which is on Saturday afternoon, we pretty much would know the direction of the market, and we pretty much would know that whether markets are likely to whether Nifty key levels around 23,000, they would remain intact. Will we see a breakdown, or are we likely to break out and accelerate based on news and on short covering?
Yeah, and especially given the kind of pain that we're coming out from all of last week. But this week is not just about us, but it's a lot about the global positioning as well. While clearly there is a disconnect between what our markets are doing and what the developed markets are doing. But it's critical because it's also marked exactly 1 week of Trump 2.0 regime. What happened last week, of course, the markets welcomed Trump with a great hurrah, but it all fizzled out up until Friday. So if you just look at Friday's price action, both the Dow as well as the Nasdaq as well as the S&P, they were all a little simmered in trade. So they didn't quite sustain that 4-day winning streak that they were sitting on. The dollar index, or rather the dollar, is now below the 108 mark on lesser than expected tariffs. Fed is expected to hold rates steady this week. Remember, it's not just our own RBI policy next week, but it's the Fed policy this week alone. So that's going to be a very, very clear indicator, especially after the Trump commentary coming in. The US 10-year yield, that's managed to reverse its two-day rise as well. And I think it's important to take into context, Nikunj, what Trump said, what he's done, and what's left to be done. Because on energy, he's looking to exit Paris Climate Pact, boost oil import, EV promotion plans are going to be cancelled, tariffs, nothing, no order yet, may implement from Feb 1st what he said about 10% tariffs on China.
Yeah, you know, first week of the Trump regime has not been unpredictable. It's been quite predictable. And frankly, I want to go back to that point that what it means for India. You know, for our viewers, ultimately, that is what matters. Has anything negative come which in a sense could really have an impact on India? Well, touch wood, nothing so far. Donald Trump is talking about de-escalating the war between Russia and Ukraine. That is good for the world. Drill, baby, drill, which means he's committed to increase oil production, which is again indirectly good for India. Third, there is no large tariff imposition which has come even on China so far, which in a sense could make financial markets believe that things could really shake in terms of global trade and globalization. The dollar index also, frankly, looks at the last 1 week has come down from 109 levels to sub 108 when I last saw. So frankly, the first 1 week of the Trump regime has not been unpredictable. It's not been scary. It is not something which is negative for India. So that in a sense is an important cue. Then you come back and say that what's next, and that what's next is something which nobody can guess. Now, 1st of Feb is when he's put in a number and a date indicating that you will soon hear more on tariffs. But going by the kind of executive orders he signed, if something really big bang had to come on tariff, I would imagine he would have not waited for 1st of Feb. Even on China, you know, the stance now seems to be mellowing down a lot. So while 1st Feb becomes this number or this deadline, which is also the budget day in terms of what you should expect from Donald Trump in terms of tariff, I'm hoping that it is more of the same. It is nothing disruptive.
You know, lots really to talk about. The fact that we're coming off of such a painful week last one, the fact that Nifty positioning is at a 7-month low right now. We've been down for a third consecutive week. And, you know, on top of that, the earnings pain clearly is being felt. Lots of earnings, of course, over the weekend as well. Key amongst them, ICICI Bank. We'll talk about that in just a bit. But yeah, over the last 10 sessions, on an index level alone, we've seen a high of 23,426 and a low of 22,977. So it's been a very, very narrow band, that we've been playing in. The volatility intraday has been extremely high, and we've seen a 1.5% swing from the high to the low. So about 449 odd points has been the kind of move that you've seen from the highs to the lows last week alone. And yeah, FIIs, they continue to sell India. The DIIs are the ones which have been supporting the market. So I guess extremely critical week, not just domestically, but globally as well. But the market positioning, that's the scary picture.
See, Aisha, frankly, if you look at the last 10 days of trade, the markets have moved in a very predictable range. I'm speaking the Nifty language because FIs are selling, DIs are buying. That in a sense, there's a tug of war, but nobody's winning the real race, so to speak. The collateral damage in small and mid-cap stocks, I think, is quite excruciating. And that is largely because nobody wants to put in fresh capital, everybody's running scared, and the collateral damage in stock prices is so large that nobody really has the appetite to think contra right now, because this time around we've seen a linear decline in mid and small cap stocks. What we saw, let's say, post-budget, what we saw post-election, the decline lasted for a day, maybe for a couple of days, and then the mid and the small cap stocks were able to come back. That is not happening. So that is one big difference in terms of the market positioning. We're staring at two parallel markets, Nifty, which is looking okay, small and mid cap stocks, which really are on the butcher block, so to speak. Having said that, I think this is an important week, and you just got every ingredient which will add to the market direction. You've got Fed, other central banks, budget, you have earnings, and you have F&O expiry. So my sense is that by the end of the week, you pretty much would know that which way markets want to move. And I'm purely speaking in terms of the Nifty direction. So in this by the end of the week, which is this time it's Saturday, you pretty much would know that Nifty wants to, Nifty will be able to, or bulls will be able to defend that key level of 23,000, or we are likely to break below that. And that, in a sense, would be the deciding factor. So news this week and the barrage of news this week would ensure that we would perhaps get a directional sense as to which way markets would move. Then when it comes to individual stock, it's really about positioning. Each stock has to be examined very, very differently. But I think we are also reaching that stage of the market where, in general, the oversold conditions are so strong that the market reaction to good news now will get magnified. Anywhere good news would come, Aisha, I think that will start getting rewarded. That may not be in abundance, but that will start getting rewarded. But by end of Saturday, which is post the budget day, I think which we would know that whether the market wants to break out or they want to break down. That's my sense. Kya lagta hai, Kunal?
Yeah, I think by Saturday we think we should be good in terms of the market trend, more clear, and that level of uncertainty which is there going into the budget for the markets, and that should be behind us.
But I wonder why the uncertainty, because it's not like you're expecting anything big bang in the budget in any case, at least nothing for the capital markets, no change in taxation.
See, Aisha, the uncertainty is perhaps a combination of a lot of factors, and frankly, budget talk has taken a backseat. Anybody you speak to,
it's been about earnings.
Exactly,
that's it.
It's about earnings and flows and lack of commitment by HNI investors. So, from a market standpoint, if you ask me that, you speak to folks and you speak to veteran market participants, nobody's talking about Trump, nobody's talking about budget. Everybody's talking about one simple thing, that the desire to participate in the market, I think, is very low. We've seen in last 18 months 3 major mid-cap corrections. I think we saw one in March, April, but it lasted for a week.
Correct.
Then we saw after budget, it lasted for a few days. Then we saw,
Right
after
now.
budget,
October
onwards. But this one has really lingered around for a while now. So a lot of stocks have made multi-year peaks. 50-60% correction is something which you don't want to experience in a bull market. So, the appetite to really take risk seems to be dying away. Volumes have come down, nobody wants to buy, stocks are falling on low volumes. These are signs of a market where there is perhaps lack of activity, lack of participation, lack of commitment. So this is not going to continue. But the point is, what will turn the tide? I'm not so sure. Maybe it could be time, maybe it could be select earning. I see the following happening, Aisha. 90% or almost 80% of the market has gone up from 2023. Now the market will start dividing, which is that 20% of the market will start coming up, 20% of the market will go down, and 30-40% of the market will stay where it is. That's how, when a reset button is pressed now. I mean, not everything comes up, not everything goes down, and not everything, and a lot of stocks stay there they are. That's my sense, that the terrain of the market in terms of after this correction would be very different. Sliver of the stocks will come back, sliver of the stocks will remain down, and a large majority of stocks will enter into time correction.
Yeah, seems to be the case. And seems like the market knows. I mean, there is reason why some stocks have managed to hold out. Some stocks have only fallen 20%, and some have even seen 60 to 90% kind of correction. And I guess it's all earnings linked, because look at the scorecard over the weekend as well, and we'll of course be talking about that in greater detail. ICICI Bank, the NPAs have eased, the NIMs are upbeat, the numbers are in line. No wonder ICICI Bank has been the darling of the market, not just in the year gone by, not just now, but that's been the case pretty much since 2020 lows. IDFC First Bank, the MFI stress on NPAs is quite evident. For Interglobe Aviation, irrespective of the market share and the kind of dominant position that it holds within the aviation pack, and as limited the options within the listed space as it may be, their profits have fallen about 19% on a year-on-year basis. JSW Steel, pretty steady Q3, the margins are a beat. And then Shriram Finance, there's been an exceptional gain on account of the stake sale that they made, and that's going to impact, or rather that's what's impacted the numbers. By the way, 18% of the weightage of the index is going to be reporting its numbers this week alone. There's Coal India, there's Tata Steel, there's Bajaj Auto, there's Bajaj Finance. That's going to be very, very important, given that it almost cherishes nearly 2% of the weightage on the index. And then there's, of course, Cipla, there's Tata Motors, there's Maruti, there's BEL, Bajaj Finserv, L&T with a near about 4% weightage. And then there is Sun Pharma, Nestle, ONGC. So it's going to be extremely hectic on the earnings calendar. And I guess that's going to be the true test.
Yeah, and again, it would be, I wish we had one trend which we can talk about. Stocks will react to numbers. Traders will adjust their portfolio because of F&O expiry and because of budget, and global macros will perhaps keep you guessing in terms of what's coming next. What is positive for me this Monday morning is the dollar index is down. It's 107?
107.7.
Yeah, it's below
108.
Below 108, which is what the resistance was. So that's positive number one. Positive number two, the banking numbers are not bad. They're not. You can't say that, okay, they're out of the park, but they're not bad. So HDFC Bank numbers were not bad, ICICI Bank numbers were not bad. I can argue about IDFC Bank numbers, whether the MFI stress is real or whether they've done something smart in taking those provisioning. So banking numbers are not bad. I'm hoping that the kind of indications which we get from autos this week should also be encouraging, considering whether demand dynamics have moved. So selectively, there is a bit of a earnings tailwind, at least in some of the heavyweights. Then there is L&T in middle of the week. It's a stock which has done nothing special, but it's a stock where a lot of expectations are there because that will tell you what the government capex and the impact of the slowdown.
It's not fallen too much also, right? It's just status quo.
Yeah, it's not fallen.
Yeah, so that will tell you that which way demand in terms of government capex is moving. That in a sense becomes this benchmark. Then there is Bajaj Finance, a clear proxy as to high premium on retail growth. Is the retail activity slowing down? The stock again has done nothing in last 3 years, but if something special comes from there in terms, I don't think anything special would come, but if they're able to say that, okay, we are continuing to grow our retail book irrespective of the stress, that really becomes another big one for me. Barring that,
Tata Motors, Maruti, BEL.
Yeah, autos are said. Autos are there. Autos are there. BL, okay. Autos would be important. Tata Motors, stocks fallen, Aisha. 1300 has become what, 700?
Yeah, 1170 has become 700.
1170, I remember 1300. So 1100 has become 700. You are not expecting anything big from them. And I don't think markets would get anything. But you get a timeline as to which way the demerger would move. It's a hurrah. So these become the individual, points to talk. But this week to take a guess that what would be the trigger, Kunal would say dollar index. You may argue back and say it could be budget. I would say F&O expiry. Then we do another round.
Earnings. I said it's not
okay,
budget.
okay. So I will say it could be F&O expiry. There's so much news and so much technicals at bay this week that it will not be easy market to call. But hoping that by the end of the week we would know that which way things would move.
Yeah, absolutely.
If you like this video, then like, share and subscribe to ET Now.